Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. One of Warren Buffett's favorite principles is to stick with winners and not add to losing investments. His Berkshire Hathaway seems to be violating that principle with its recent purchases of Occidental Petroleum stock. In this video, I will tell you why Warren Buffett bought Oxy stock to begin with, and also share 3 other stocks I picked up during the flash crash. Yes, I bought more Oxy stock myself as well.
In his 1988 annual shareholder letter, Buffett touched on the topic and gave credit to Peter Lynch, who was then a superstar equity manager for Fidelity, running on the Fidelity Magellan Fund.
We are just the opposite of those who hurry to sell and book profits when companies perform well, but who tenaciously hang on to businesses that disappoint. Peter Lynch appropriately compared such behavior to cutting the flowers and watering the weeds. Buffett has generally followed that approach over the years, investing in big winners such as Apple and Coca-Cola in Berkshire's $300 billion portfolio. But he went against principle when he cut Berkshire's stake in Apple this year by 2/3 to 300 million shares. In doing so, he left more than $35 billion on the table and incurred a sizable tax bill that could total $20 billion.
Occidental stock is down sharply this year and has been trading below Berkshire's average cost. Berkshire's purchased 8.9 million shares of Occidental from Tuesday through Thursday for about $405 million at an average price of $46 per share, bringing its holding to a 264.2 million shares, a 28% stake worth around $12 billion. Occidental has been one of Buffett's largest purchases in recent years.
Berkshire bought the stock at its 52-week low after having been absent from the market for Occidental since June. Its average cost is around $53 a share, resulting a paper loss of about $1.5 billion.
So I think the Oxy investment, if you study Occidental, what you'll find is they don't really have exploration going on. So if we look at the whole fracking business and the Permian Basin and all of that, basically when you drill a well, you've got a 90+% shot of what's going to come out. I mean, the probabilities are really high. And it's not like what used to be conventional oil. So here you've got very definitive metrics going on. And so Oxy basically has almost no speculative drilling going on. And so, in effect, it looks like a CD. They're clipping the coupons. And what Oxy is doing is they have a huge gusher of cash flows coming out. And that huge gusher of cash flows is only going into buybacks and dividends. So it's all being pumped out to shareholders.
Occidental shares were up 3.9% to $47.13 Friday as investors took comfort from the Berkshire purchases.
This is a map of known sediment basins in the United States. Many of these regions hold deposits of natural gas and crude oil. Now, this map compares how much crude oil each basin holds. Of the many formations scattered across the country, one reigns supreme.
With our new estimates of the Permian Basin, that resource estimate is on par with what has been estimated in the Middle East.
Surging Permian production has helped make the U.S. the top oil producer in the world.
My second stock is gold stock. While gold surged to new all-time highs, the gold mining sector took a major hit after inflationary forces from labor. Operational challenges and higher royalty and streaming costs weighed heavily on profit margins. Why does this sell-off look to be overdone?
As is often the case, the market tends to overcorrect in both its bullish exuberance and its bearish panic over the sectors and companies. As a result, in today's video, we'll look at this dividend-paying gold mining company who currently trades for penny on dollar based on the net asset value.
Barrick Gold is one of the world's largest gold miners and also has one of its finest asset portfolios. In particular, it has one of the world's largest portfolios of Tier 1 assets and also has considerable exposure to both gold and copper, with significant additional copper production likely to come online in the coming years. It also has a lengthy production profile, with all of its mines having at least a 10-year business plan, and in some cases even extending their production profiles to 15 or 20 years. The company also has a significant production pipeline in both gold and copper that is expected to sustain the company's lengthy production profile for years to come. Barrick is trading at its lowest earnings multiple in years, even with trough production levels. On a positive note, Barrick will see material reserve growth at year-end, and 4 Mile continues to impress, which is arguably the best undeveloped gold asset in the Tier 1 ranked jurisdiction. While it is considered to be one of the more geopolitically risky large gold miners due to its significant presence in Latin America and Africa, it is pretty well diversified across the globe in terms of its geographic presence, with substantial exposure to North America, South America, Africa, Oceania, and the Middle East.
Barrick Gold also has a very strong balance sheet with a A3 credit rating from Moody's, which is the highest in gold mining industry. It also made its balance sheet even stronger this past quarter as its net debt declined by 27% in the past quarter alone and now sits just around 500 million, given its significant flexibility to opportunistically allocate capital to growth projects and stock buybacks.
Stock buybacks, in particular, look attractive right now, given the recent dip in the stock price and the fact that it trades at a discount to its net asset value and its historical valuation multiplies. The company is also executing reasonably well on its production profile, with gold production remaining stable sequentially, while copper production increased 12% sequentially thanks to efficiency improvements. The company is also bullish on its Q4 outlook, expecting it to be strong quarter production-wise, which will help it achieve its full-year guidance. Additionally, the company has a lot of its investments in infrastructure and maintenance behind it, which means that capital expenditures should decline moving forward, further boosting free cash flow. That said, it is not without its challenges. In addition to fighting some of the cost issues, one of the biggest challenges facing the company right now is its African operations. Meanwhile, the Reko Diq copper gold project in Pakistan remains on schedule, with production expected to begin at some point in 2028. If it is successfully brought online, it will be one of the largest copper gold mines in the world and will meaningfully increase Barrick Gold's presence in the industry as a copper producer.
Overall, between its very strong balance sheet, high-quality gold assets, geographic diversification, strong organic growth profile, disciplined spending, and focus on organic growth rather than expensive acquisitions, and significant production upside in copper, all combined with its cheap valuation, decent dividend, Barrick Gold is a highly compelling gold and copper mining investment right now.
My third stock is Snap.
Disappointing initial return from Snapchat.
Peter was always an honest man, and I know that if Peter were here with us today, he would say that he was not disappointed in Snapchat, and he would forgive you, Lev, for your misunderstanding. That's just the kind of guy that Peter was. Warm, generous, and not disappointed in Snapchat.
Okay, this one is not a value stock, but I think Snapchat has limited downsides and simultaneously more potential good news for the new year. Hence, I bought Snapchat as a speculation play based on my belief that TikTok's loss will be Snapchat's gain. And I'll tell you why in a second. Snapchat's new catalyst is staring me in the face. The TikTok ban in the US, which is set to go into effect on January 19th. President Joe Biden signed a bill that required TikTok to be sold to a non-Chinese company or banned from the US.
I think what would harm TikTok could substantially benefit Snapchat, given that 70% of Snapchat users also have TikTok. According to a report from Aptopia, TikTok brings in over 120 million users in the United States every month. Should the ban go through, it will result in a large number of United States content consumers looking to move to other social media platforms.
The average Snapchat user spends around 33 minutes on Snapchat per day, which is lower than that of Snapchat users who also have TikTok and spend 38 minutes per day on the app. Snapchat stock has been underperforming its biggest competition. As for the valuation metrics, the company has a forward PE ratio of 31.15, higher than its biggest competitor, and price to sales at 3.7. I see a window for outperformance. Part of what has been driving the volatility in shares this year is oscillating investor confidence that the company's transition from just an advertising model to an ads plus subscription revenue plus hardware model will be successful. In September, Snapchat signed an expanded partnership with Google Cloud to grow out their AI capabilities, including a custom chatbot. This is a big deal. A system that is closely trained on Snapchat's proprietary data so they can serve better ads and compete with the bigger tech giants in a big deal. CEO Spiegel talked about this on the Q3 call. Snap announced an expanded strategic partnership with Google Cloud to leverage the multi-modal capabilities of Gemini on Vertex AI to power snapping with my AI, our AI-powered chatbot. In Q3, the number of snaps sent to my AI in the US more than tripled quarter over quarter.
With this, I think Snapchat is eliminating some of the key risks with the future of the company. They are leaning heavily into AI today to help support strong ad placements. They are focusing on Snapchat Plus for tomorrow, so the company has more of a SaaS-like revenue.
I think this is a great combination. Now, the company has the strongest tailwinds in the company's history. I feel confident about the company from here in 2025. The last stock is, wait for it, Guess. I made a whole video on Guess stock here. You can check it out if you are interested.